Well, good morning. Welcome. I'm University of Illinois Extension's Todd Gleason. I'm a farm broadcaster. You can hear me at willag.org, willag.org, or on WILL 580. In the next hour or so, we're going to talk about acreage decisions with University of Illinois Extension Gary Schnitke, ag economist, and Scott Irwin. Both are in the College of Agricultural, Consumer, and Environmental Sciences, and they work really hard to put together an outlook as well as some budgeting and other financial information for you today. We'll take questions throughout the hour. Make sure you put those in that gray box. Scott Irwin is here now to begin our discussion. Good morning to you, Scott. Thank you so much for being here. What's the plan for your project today?
Well, I'm going to do the outlook part of uh, the morning's presentation. Basically, my job is to give Gary corn and soybean prices and the outlook for 21 crops. So that's what I'm going to do, and then Gary's going to take that and do some analysis in terms of the acreage decision. So let's get started. I'm going to start with the old crop look at what's been happening. This is a chart that shows what's been happening with corn exports. So we're going to just kind of set the stage by starting on the demand side of the balance sheet. And the top line is the current latest February USDA WASDE marketing year 2020-21 forecast for U.S. Corn exports of 2.6 billion or 2,600 million bushels. That was raised 50 million bushels in the February WASDE, which actually was a little bit of a disappointment to the market. We can see the other lines that are on this chart plot what we call the total export commitments for the current marketing year. So that's exports shipped plus remaining outstanding sales. And we do that by week. And the red line shows that we have just from the get-go have been substantially outstripping the pace in the last 5 years, and then by a lot over the 2019-20 marketing year. And in fact, the total has even bumped up a little bit more in terms of that pace in recent weeks. So based on the most recent data, we've already have total export commitments of 2266, which is 87% of that 2600. And so that's why there's still quite a bit of bullish sentiment in the market that the 2600 may not be high enough. Next slide. But no, go back, please. So there is a possible warning sign, though, on the corn export sales side. That's that despite we have basically these massive outstanding sales, but we've actually to date only shipped about 850 million bushels, which is, showing you just how far we have to go to have shipments meet these commitments. In fact, from here on out, we need to be seeing export shipments on a weekly basis from the U.S. Kick up to about 60 million bushels per week in terms of shipments to make that 2,600, which might be a little bit of a tall order, but we'll see. But overall, we don't want to miss the big picture. We don't want to miss the forest for the trees here, is that exports have been the main driving factor for our high corn and soybean prices. And we're just kind of arguing about the details here right now. Okay, let's go to soybeans. Same chart on soybeans, and this is really an interesting situation. The February WASDE is up there in purple at 2250. So that's the current USDA forecast for the marketing year. Our current exports and outstanding sales sit at 2185. So that's 97% of that 2250. And again, that pace is just dramatically above where we've were the previous marketing year or comparison to the 5-year average. So it's obviously a very bullish situation in soybeans. But here's what's really interesting. Next slide. That we've already shipped 1827 million bushels on soybeans, and we have a total of 2250. Now, we always know that the exports particularly for soybeans, really flatten out, and you can see that's the historical pattern as the South American crops become available. But you know, already shipped 1827. We have 2185 in shipments plus outstanding sales. It really seems like 2250 is going to be easy to meet, and in fact, we might likely go above that a little bit as we look forward. So, a continuing pretty bullish looking situation for soybean exports, even with good South American crops coming on. All right, next slide. So I'm going to take a quick look at the old crop balance sheets. This is the balance sheets for corn. And I start with, in red, the 2018, 19, 19, 20 marketing years for comparison. And then in blue, I have the 2021 balance sheets from the USDA. I start with May, their first balance sheet, because we want to make a point about how much the balance sheet has changed. And then the Feb WASDE is the latest numbers from the USDA. And then over in the last column are my own personal projections at this point. We can go through this pretty quickly in that my supply forecasts for corn for the old crop are identical to the USDA. I don't see any reason to argue those. Those are just simply not going to change much moving forward, if any. It's really on the use side where there can be some differences. In particular, my biggest difference with the USDA is on feed and residual. That has been going through some very funny gyrations lately. USDA in December was at 5,700. Then we got a very bullish quarterly grain stocks report for December 1st that was released in January, and the USDA then lowered feed and residual use, which really didn't make any sense to me. And with cold winter livestock numbers that we have in place and profitability signals we get, I think that we're going to see better feed and residual use in their old crop than what the USDA has at 5650. So I'm going to go 5750. I also see just a little bit stronger ethanol use, only about 25 million bushels. And I also am going to allow exports to be a little bit higher, 2650. I am a little nervous about the lack of shipments, but we do have huge sales on the books. So I'm going to come out with total usage of 175 million bushels higher than what the USDA carried in their Feb WASDE, which gives me ending stocks of 1327 versus 1502. That's a 9% stocks to use ratio versus 10.3 for the USDA. And so with that little bit tighter balance sheet, I'm looking for a season average price 20 cents higher than what the USDA has now at 450. So some small differences from the latest USDA picture for corn. Let's move to soybeans. So a similar situation with soybeans. Where the supply side of the old crop balance sheet, mine's the same. I've got crush being the same. Again, I'm going to be, and I think this could be a little bit conservative. The USDA is at 2250, as I said, on exports. I've bumped mine to 2275. I think there's room for it to even go a little bit higher. Seed usage going up over what the USDA because a little bit higher acreage, giving me total use of 4,600. And that 25 million bushels may not seem like much, but that drops my ending stock forecast to 95 million bushels, or 2.1% of use, which is really getting us down to bare minimum pipeline stocks as we go through the final quarter of the marketing year. And I'm going to push the marketing year average price to 11.50 based on this situation. Now, farmers might ask, why is both USDA and my marketing year average price so much lower than current spot prices? I mean, in some cases, $2 lower. That's because of the way that you have to weight the 12 monthly farmer price received. The USDA calculates. It also incorporates some now what would be very low forward contract prices. So that's why that number is so much lower than spot prices right now. All right, let's move forward. We're going to now turn to the new crop outlook for 2021. And I want to start with what the acreage base looks like. And let's just jump to the next slide, Gary. This is kind of one of my favorite charts to start out thinking about, new crop balance sheets every year, which is what's the size of the total acreage base for crops in the US going to be. And this chart shows that peaked at 360.2 million acres back in 2013. And with the high prices that we, saw in the boom years, we were kind of in the low 350s to 360 million. And then as we came off those high prices, the total acreage shrank all the way down to around 344 million acres in recent years. With the substantially improved price outlook, I've got total principal crop acres going up 3 million acres, pushing us back upwards towards where we were in 2015, 2016. And I wouldn't honestly be really surprised if it was even a bit higher than that. But within that relatively small change in the total, there's a big story on total potential principal crop acres. Because remember, the total acreage base consists of prevent plant plus what we have in the Conservation Reserve Program, or CRP, plus what we actually put in the ground in terms of principal crop acreage. And you can see I'm forecasting a more normal amount of prevent plant acreage, because everybody knows about 2019, almost 20 million acres of prevent plant, and half of that again in 2020, when the historical average is more like something around 4.5 million acres. And that's what I'm projecting for 2021. Well, with that increase in the total, plus the a outlook for a more normal level of prevent plant, we get a huge increase in principal crop acres of, I'm showing it just under 10 million acres, and it could be even a little bit higher than that. So we're going to have a large base of planted acreage unless we get another bad, wet spring. Next slide, please. So now we can talk about the composition. I'm looking at something like 182 or 183 million acres total planted to corn and soybeans. But obviously, very interesting. What's that split going to be? Well, you saw my old crop balance sheet just a couple of slides ago, and it's no surprise that the futures markets are screaming one thing at farmers this spring: plant soybeans. Plant soybeans. You can see this is the ratio on a daily basis of the November 21 to December 21 soybean and corn futures prices, and we are way above a historical break even of around 2.3. We're sitting recently around 2.6. So a very strong signal in the futures market looking forward to plant soybeans. So that's the important signal that I see coming out of the market. Next slide. So a quick look then at first look at 2021 22 balance sheets, and I'm just going to just focus on, in the interest of time, on that last figure. I've got area planted being 91.9 million acres. So I've got, with the improved corn prices, even though we need, basically what the market's saying is that we need more of both corn and soybeans, but we need even more acres of soybeans relative to corn. That's the way I'd put it. So I've got us at just under 92 million acres. My yield is 100, trend yield is 179, gives us the potential for over 15 billion bushel crop fairly easily. And then we get down to the use categories. I've got us at 5,800 on feed and residual. I've got a big rebound in food, seed, and industrial based on an ending or a real minimization of the pandemic, and basically ethanol use and gasoline, driven by a gasoline use and driving returning to pre-pandemic levels. Exports is a real wild card in this outlook for new crop. I'm a little bit more conservative, I think, than many. I've got it dropping off by 250 million bushels. I think that China's not going to be as big a buyer next year. That still leaves me with ending stocks slightly below 1.5 billion bushels, and then a stocks to use ratio of 9.7%. So that gives me a $4 new crop price projection for the US right now. So let's now take a quick look at soybeans. Again, a big increase in soybean acres, over 7 million acres. I've got us at 90.8 planted acres on soybeans, 15.5 bushel yield, gives us a crop over 4.5 billion bushels. I've got crush coming down 100 million bushels because of a return of ethanol production and larger DDGS supplies. A little bit less optimistic on exports. Put it all together, I'm at 43.85 on use. Gives me still a pretty small ending stocks of 285 million bushels. So if you wonder why the market has to continue giving large incentives to plant soybean acres, because even with an increase of 7 million acres at a trend yield, we're really not have any extra cushion on soybeans given the size of the demand base that we have. And that gives me a season average price forecast of 1075. So what I want to do now is just end with a point on the weather. Next slide, please. A lot of talk about dryness, particularly in the western part of the Corn Belt, and that is definitely the case. Doesn't look dry out there based on our pictures right now, Gary, even here in Illinois, but we've actually here in East Central Illinois had a very dry winter. So that's leading to a lot of concerns that, will that droughtiness spread into the Corn Belt, continue and spread next summer. A lot of concern about that. So next slide. So I took a look at this to give you some perspective. This is the relationship between winter, which I define as December, February, and the following summer, June, August precipitation in Iowa, going back from 1961 through 2020. And that's as close to a zero correlation as you can get. And, I'm not saying that we can't have a big drought next summer, but history says, even looking at that scary drought monitor map on the previous slide, I don't believe we know anything about what the weather's going to do next summer. It can be, um, extremely dry, uh, or we could end up easily getting normal to very good weather. So what that means is when you're looking at those balance sheet projections is that weather's going to be a big story as it always is. And we could have stratospherically high corn and soybean prices if we get bad weather, but the odds actually favor more getting normal to good weather, and that could really pressure prices uh, below my projections. I want to end there, Gary. You can take over.
Yeah, so we got a couple questions for you. What does just Scott? What does history show when bean to corn price ratios? What do farmers actually plant when we see bean to corn price ratios at these levels?
Well, there's a lot of noise in that, Gary. But I base the last time we had this big a shift from in favor of soybeans. Gosh, now I've got to get the year right. I think it was moving from either 16 to 17 or 17 to 18. Off the top of my head, I can't remember, but I remember going back and look. And the last time that we shifted by about 7 million acres, we had almost exactly these kinds of price ratios. So it has happened in the past, but I'll be the first to admit the reliability is, not necessarily extremely high.
So what about you're looking at futures prices? It's really cash prices that are driving these planting decisions, and the ratio roughly in Central Illinois would be 2.7 right now. Is that looking at it at cash? Would you cash prices? Would you come up with different values?
Maybe a little bit less incentive based on the cash values. I'm the first to admit that, and this is a good opportunity for me to express kind of a concern I have. I'm a little worried given Corn Belt farmers' tendency to like to place their bet in periods of high prices on corn acres. I'm a little concerned given the extreme tightness of the soybean supply and demand situation that we're not really putting enough incentives in front of farmers to get the switch to soybeans that we really need. And we have seen surveys coming out. I saw Reuters was out earlier this week, and 89, 90 million, that is just not going to cut it. If we want to, build a little bit of surplus back on our soybean balance sheet. So I'm a little nervous about that. I think it wouldn't. That I'm concerned about whether we've really bought the number of soybean acres that the market needs to buy. Put it as simply as that, Gary.
All right. So, what happened to total acres of 362 in 2008 to the 347 you expect in 2021?
Excellent question. Did those acres evaporate? No. A lot of that is fallow. Just acres that don't get planted, or particularly in the Great Plains. There's just acreage drops out. It's a big country, and acres drop out. A lot of that tends to be on the fringe. You drive through East Central Illinois, you don't see many acres dropping out, do you, Gary?
Yep. Nope. No, you don't.
No, I'd say not a single acre. Would you, Gary?
That's right. No.
No, but it's going to occur in areas where you see acreage coming out a little bit more. Great Plains, South, even in the East. My best personal example of this is I remember in I think it was summer of 2013, driving through the Appalachian Mountains in western Maryland, and I couldn't believe all the corn fields that I was seeing. That's what $8 corn will do. So, but they're not there anymore.
All
A little bit here,
right.
a little bit there adds up.
Any comments about the commodity super cycle chatter?
I'm not ever been very. I think that the super cycle talk is it has a logic to it, but it's by attaching the idea of cycle to it, it's implying that there's a predictability to these big waves of commodity prices, and I think that that's more looking backwards and saying that's what happened than what's happening going forward. So right now, I'm pretty skeptical that we're going through another commodity super cycle phase, and I wouldn't base my marketing plans on that.
All right. So one other question. What happened? So most of the corn exports, where is it going?
Well, the biggest increase is to China.
Okay.
They've bought at a pace that we've never seen before. There looks like they're probably going to do at least 12, 13 million metric tons, and that's about twice what there's called their TRQ, which is their quota level. So that's again the big story on corn, but we're also seeing good sales to our traditional customers like Canada, China, or Mexico, and South Korea, and places like that.
Can the soybean corn ratio be tweaked to account for variations in yield and differences in beta and in basis?
Well, it can be, but I would say as a method that I think a better thing to do, it's just a general indicator. It's just a broad relative indicator of the profitability between two crops, and that's, I think, its limitation. And if you want to do that kind of precision, I think then you need to do the kind of budget analysis that you're going to do, Gary. That's the kind of hard analysis of the relative profitability of uh, these acreage decisions. And I don't think there's a good way to make the soybean corn price ratio do that very easily. It's just a broad indicator.
All right, Scott, we moving on to acres now, and we do have a poll question for you. What do you expect to do with acreage this year? And so as the poll comes up and we look at that, what I'm going to do is just show you what acres look like in first the United States and what those projections would look like for corn, soybeans, wheat, and then we will follow through and get more narrow or more focused on Midwest and Illinois. So that's the outline. And as you're responding to this, we have 53% of you voted. So let's see where we're at here. And we're going to end the poll here in a minute, and we'll show you the results. And the results are coming up, and it says 14% of you are more corn, 52% same corn, soybeans, 24% say more soybeans in 21 as compared to 20. So there's our poll results. You can take that to the bank. Here is what corn and soybeans have done historically, and this slide shows the United States. You can see there that corn has grown over time, particularly after 2005. So is soybeans, and the major crop that has been going down is wheat. And now we're going to focus more in on that latter time period from 2004 on. And just as Scott showed, we had an increase in corn acres. That increase happened about 2012. Soybean acres have been going up, and actually corn and soybean acres pretty well met in 2017 and 2018. 2019, we saw soybean acres fall fairly dramatically. If you remember 2019, we had prevent plant, and we planted corn, and we took soybean prevent plant, and then 2020 rebounds, and 2021, if the projections hold, we would be roughly, or looking at Scott's forecast, about similar, 1 million acres less of soybeans than corn, but close to one another. I guess it would be fair to say that we're going to expect those two crops to be moving fairly close together in the future. And maybe we'll even see soybeans being the bigger crop of the two in the United States. So that's the United States. Here is what it looks like in Illinois. And again, corn, soybeans, and wheat saw those big divergence in corn and soybean acres in the mid 2000s. And again, we're going to pull in there on those 2004 and on. And since roughly 2007, 2008, that period, in 2012, we saw that distance being fairly far apart, and then they being narrowing. And again, roughly in 2018, the corn and soybean acres were roughly equal to one another. Then they widened out again in 2019 and 2020. We don't have a projection here for 2021, but 11.4 million acres in 2020 for corn, 10.3 million acres for soybeans. Wheat has been 600,000 and roughly, it's been below 1 million for a while. So that's corn acres across the state, and then those acres vary within the state. Northern, and we got northern, central, mid-south, and south here, and these combine the crop reporting districts within those bands. If you're looking at northern Illinois, 60%, this would be for 2019, 60% of the acres were in corn, 39% in soybeans, 1% in wheat. Central region, 52-47, 52% corn, 47% soybeans. So in 2019, more corn than soybeans. We don't have the 2020 numbers yet. I suspect they were much closer to one another in 2020 as the prevent plant came out of there. South, mid-south, we're seeing roughly equal acres, but more soybeans than corn. And then finally down in our southern part of Illinois, much more soybeans, 55% soybeans, 33% corn. Over time, as we look at those acres in this state, those four regions have all come down. And here you're seeing the longer trend from 74 through 18. You sort of, each one of those lines, this is the percent of acres in corn. So stating that in corn acres, you can see there the big rise in 2008 and then just a steady decline since roughly 2010 on. And let's just blow that up a bit more. So you can see that in recent years, we've seen all areas move from corn and in essence to soybeans. Northern Illinois from a high of over close to 70% down to 60%. North Central or the Central region, 52-48, and you can see the Southern region also moving from corn to more soybeans. If you're curious, here's what's happened to wheat across those four regions. Down in all regions in our major wheat percentage wheat acres are in the South region. It reverses the flow of the corn acres. South has more wheat, again coming down over time. South Central 3%, and then the North and North Central are essentially at 1%. That gives you a feel for where we're at across the state. And here's that blown up for wheat for the last period. Here is just to show that those trends in Illinois mimic all of the Midwest. You go into northern Illinois, we have more corn acres than soybean acres, and if you keep moving north, you into Wisconsin, Iowa, you see more corn acres. For whatever reason, in Iowa, northern and central Iowa, we see heavier corn acres versus soybean acres. Central Illinois there, roughly equal, and then south, and you can see that essentially that's the major area in the Corn Belt where there are equal, and then more in the southern Illinois, more soybean acres. That equal acres also happens in Minnesota, southern Minnesota, and parts of South Dakota. So in the Corn Belt, obviously, switching from corn to soybeans, or that acreage battle is between corn and soybeans at this point in time, and those are the major crops, and there was where we're looking at. So now we're going to do the budgets, and we shouldn't have used this picture this year because the budgets look good. So we should have done we're doing something unusual this year in that our budgets are showing positive numbers, which hasn't been always the case. So setting up the budgets, got a poll question for you, and this does come into play here as far as when we look up at these budgets. So do you know how many acres are really up for grab for switching corn versus soybeans to compare to how many acres don't switch from a rotation? That's a good question. Here's what I would observe over the period, particularly for Illinois. Those rotations change very slowly. So if we're talking about looking at Illinois and looking at the signals this year, I would not expect a major shift to soybeans, but I would expect perhaps a slow shift to soybeans, and that slow shift happening across much of the state. And again, even though northern Illinois has more corn than soybeans overall, if you look at the switches, they happen roughly the same proportionally across the state, at least historically. So here's what people are saying about nitrogen. 28% have most of it on, about half have 8%, about a quarter 7%, and 45% have none. So whether you have none or most of it on is going to make a difference in budgets this year. And as you know, maybe nitrogen has been going up in price.
Yeah.
So here's our fertilizer prices for anhydrous ammonia, DAP, potash, coming from the Illinois Production Cost Report. Anhydrous ammonia was $420-ish September, in that range, and it's been going up, and it was over 500. And last reading we have from the Illinois Production Cost Report, $520 per ton. That isn't. It has been larger in the past, but it's very. Those anhydrous ammonia prices are highly correlated to corn prices, and I would not be expecting those to go down. And if anything, if we continue to see higher corn prices, I would expect to see those prices go up. If you're looking at our budgets, you're going to see a more muted response to those costs because of the nitrogen that has been applied. We're increasing non-line costs from 2020 to 580, coming closer to the 2019 number. 2019 costs for corn were higher than normal because of drying costs that year, so not as high as 2019 yet. Again, where that nitrogen decision was made will have an impact on whether that's 580, 610, 620. Similarly, soybeans are coming up as well. Again, if we're seeing these prices, which aren't going to impact decisions this year, but if we're looking at those prices, over $4 corn this fall, over $10 soybeans this fall, I would expect costs to be rising again into the 2021 year, as well as some upward pressure on cash rents. So costs are going to rise. And here's our budgets, though. So we're going to do corn, soybeans. This was for central Illinois, high productivity land. I'm going to point out here, this is 2019. We had a $12 return for corn, $15 return for soybeans. That, by the way, included ad hoc federal payments of $110 and $94. So just to give you a feel for how important in that year MFPs were. For 2020, we're still using 425 price. So and USDA is a bit higher than that. We have $68 of ad hoc federal payments in there and $191 of return. That's a good return because of this price and this $68. Here's where we're at for 2020, 72 bushel yield, 1120 price, again, $45. This is CFAP. $359 in non-line cost, $217. Note again, $217 versus $191. Soybeans are more profitable than corn, although probably no one's going to complain too much at those levels. Here's what 2021 looks like. 217 is our bushel projection. Again, this is a trend line projection. We have been hitting higher than that in most years since 2013, except for this one, 2019. This was the wet spring. $4 corn is what Scott had in their budgets, $8.68, and we did not put a ARC PLC. That this price and this yields don't generate ARC PLC, don't generate crop insurance, and we're putting zero in there for ad hoc federal payments. If you have, this is basically adding here some of the something happened there. So NP and K in there. If we did not have any NP and K applied, you can add roughly $20 or so to those non-line costs. Again, farmer return here of $13, which is positive after a cash rent. Here is soybeans, 68, 1050, which is 25 cents lower than Scott's price, but we're still using old budget values. Again, no ARC PLC, ad hoc federal payments, crop insurance, non-line cost, cash rent, $71. And again, here, $71 is higher than $13. 71, again, higher than 13, so roughly 50-ish dollars of more profit for soybeans. And again, we're using 1050. Scott was using 1075, I believe, Scott. And Ag Outlook is even more bullish than Scott is. So something is in the air there. But anyway, positive numbers, but more positive for soybeans than for corn. And I got a question, and we'll answer some questions. And as you're answering this, do you expect another round? Should we be putting in a budget, ad hoc federal payments for 2021? So the nitrogen application compared to history, i.e., would you say farmers have applied more or less nitrogen than normal, or this last year? In general, I think what we're seeing is more of the fall applications coming down over time, not much. So that 28% is continuing a general trend down. So here's we should ask this. How many people still have 2020 corn and soybeans so that they can sell them at those higher prices? That's a good question. At this point, Scott, do you have a feel for how much usually is unmarketed at this point in time of the year? And we'll come up with the poll results here. 64% of you have voted. So, and let's put this in here. So 75% of you expect no payments, 21% less than 25, 5% between 25 and 50. So no payments is the normal, the large answer. I wouldn't be surprised if there was some, though. Let's see. Anyway, as we're looking at this, one of the things that you're going to see here is that big break here in 2013. Before 2013, and remember, we're looking at high productivity farmland in central Illinois, which is the heart of the Corn Belt. Before 2013, corn was more profitable. And here, roughly, the ethanol build ended, and soybean exports have continued to grow, except perhaps for 2018, 2019, that wasn't the case, but we had large ad hoc federal payments. And you can see we've been looking at these years here where soybeans have been more profitable than corn. And again, coming here to 2021, we would be expecting the same sort of thing. So, what that means for acreage decisions, but I think what you're looking at here is sort of a long-term trend of soybeans being more profitable than corn, and that's likely to continue until we have some other demand, and maybe it's exports that causes corn demand to grow relative to soybeans, and soybean demand has been growing because of exports. Just to give you a feel, this is one thing that Scott often shows is here we've had this 237 average from 1975 to 2006. We then hit a new higher plateau. 428 has been the average since 2007 to 2020. And since between 2014 and 2019, and again, ethanol build ends, and we've had good crops. We've had a 354 average. It looks like we're going to be above that. And if we hit this $4, we still wouldn't hit this 428 average. Compare that to soybeans, and if we go back a ways, 1930 to 1974, if you remember these prices, and I do, some of these prices, you remember this break, you're getting up there. But here's it is in more recent years, 604, 1016. So, and again, our prices, our projections would be above that sort of average. And again, pushing, and USDA is coming in there as well. So both crops look to be profitable, but there's an incentive to plant soybeans. Finally, we're coming to the end, or closing in on the end of the price discovery period for crop insurance. So I want to just give you a feel for the safety net that RP will provide. So give you some risk return. I'm again using this sort of central Illinois situation. 210 APH, 450 is sort of where we're at on our crop insurance price. Won't know that till end of next week, 1165. But here's the RP guarantee for corn, 803 for RP stated using that projected price, 594 for soybeans. Here we put this in terms of a cash guarantee. So we take this 450, realize that that's a projected or a futures price, subtract 30 cents off that price here. So you're sort of looking at something in the 750 range per acre. For soybeans, 579. And then finally, from that cash guarantee, subtract off cost, minus cost here, and we put 580 for corn, 346 for soybeans, minus a cash rent. So you can see here, RP 85, potential for a loss there without any other revenue, minus 150, minus 66. So there's a more of a downside price risk on, or downside revenue risk on corn at this point in time, just looking at those numbers. You might think about adding some ECO here or SCO to bring that up. Anyway, that's a decision that you could make. So looking at both of those, you would be saying soybeans looks to be more profitable than corn, and there is more downside to soybeans, or corn than soybeans, given this RP 85 sort of thing. So to summarize here, Prices currently are higher than in recent years and favor soybeans. This actually has been the case since 2013. And I guess over time, until something changes, some demand happens for corn, or soybean experts stop for soybeans, and hopefully that won't happen. We're still in this situation where we're thinking more soybeans than corn. Don't think that those major shifts are going to be happening in the middle of the corn belt, but if we have some marginal acres to think through, probably thinking more soybeans than corn. So if you got any questions, please ask them. Scott, we have another one for you.
Well,
That's
let's
good for
get to
you.
the questions in just a second. We've got a couple of other things while we're still on it.
Oh, yeah.
That last slide is related to crop insurance. Don't forget, Gary, you want to send them to your tool. This is available in both the FarmDoc and the FarmDoc Daily website. Doesn't matter which one you go to. You'll find tools up across the top of the page, and then you can go in and find the crop insurance tools along with the ARC and PLC calculators. Both are important. And if you've forgotten to download the farm management handbook or just don't have the opportunity at the moment, that's there, as well as some of the spreadsheets. So that's easy to get to. Remember, FarmDoc Daily or FarmDoc, either one of those websites. They are two different websites. And go to tools. You'll be able to get into the crop insurance decisions tools and download some Excel spreadsheets, or just do it online, either one. And we'd also like to thank our panelists, Gary, before we get to the questions. They include Compere Financial, TIAA, the Center for Farmland Research here on campus. If you want to learn more about farmland, farmland.illinois.edu. The Illinois Soybean Association, thank you. Farm Credit Illinois, FS Growmark, and Illinois Corn Growers Association, thanks to all of them. Of course, the College of Agricultural, Consumer, and Environmental Sciences, and the Department of Agricultural, Consumer Economics. Thanks to all our sponsors. Quick reminder that there are a couple of other webinars still yet to come. Next week on Thursday, the 25th, we'll recap the financial position of Illinois farmers. And on the following week, the 3rd day of March, that also is at Thursday. These are also all at 11 o'clock. You're already signed up for them. The final look at the commodity title and crop insurance decisions. So come back then. Gary will have more for you about those. Gary, we do have some questions. I bet you had some time to go through them. Which ones are, we have a series of them. They rolled through. Be short. What are your quick answers to some of these questions?
So how much work would you put towards renewable diesel for increasing soybean acres? And I'm going to let Scott take that answer.
Very interesting question. That's not as easy to answer as you might think, because we are seeing a building boom for renewable diesel. Someplace between 2 and 3 billion gallons are on the books in increased capacity, but a big chunk of that is probably going to cannibalize by what I call traditional FAME biodiesel demand. So what's the net? It's going to be positive, but it's not going to be the entire size of the build out in renewable diesel. And we also have to remember, when you look at that if you're incentivizing soybean oil into renewable diesel, that you're going to get a whole bunch extra soybean meal that you may not need. So the net bump on soybean prices may not be as big as some people are expecting. That's my short answer.
Cool. How much of a corn, soybean, and wheat from 2020 is unsold?
That's always a good question, and that's probably something that people in the commercial grain trade have a much better view. I didn't perceive it to be anything substantially different than kind of the normal pattern. So that, we probably at this point have no more than 30-40% of the crop left to market.
All right. So one question. November cash soybean prices are 11.64. So why use 10.50 in your budgets? That's a good question. 11. I would say the 11.64 is a first off is a futures price. So I would be coming down some. And
No, that's the spot price, Gary.
oh, I'm sorry. It is the spot price. I guess
That's a forward bid. A forward
Yeah.
bid is
Oh,
1164.
I'm sorry. And it's just hard for me to put a budget with 1164 in at this point in time. And by the way, if you do that, all you do is make soybeans look more positive. So you're right. You can forward contract delivery, and I guess I would say you would want to be doing some of that. And I'm not saying how much, but some. Again, I think Scott would agree with this. If we have any sort of shortfall, particularly on soybeans, we could be looking at some fairly high prices.
I mean, we could honestly, a drought next summer, we will be looking at record, all-time record highs on soybean prices, I believe. But you have to think about what are the odds of that happening. But what if we get really good weather and we have a U.S. average soybean yield of 52, 53 bushels an acre? Then the party's over.
Yeah, and would you give a drought probability of 1 in 20 years? Is that where you'll be putting it at?
Well, again, it's the severity really matters when you ask that kind of question.
So I'm 2018 or 2020, 2012 drought. So
that's about 1 in 30.
okay.
But what I would call at least a 5% reduction below trend yields. Historically, that happens about 1 out of every 8 or 9 years. Now, what's interesting, in the last 20 years, we have been on the low side in terms of the frequency of our droughts. Is that climate change? Is that good luck? Or is that, better drought tolerance? If you want to start a coffee shop argument, just say it's not improved hybrids.
Scott, 25 years of interviewing Daryl Good, and his standby was it's normal until it's not, which is kind of what, right? Which is what you told us early on, as it relates to drought too.
Yeah. So having said that, so you assume it's normal till it's not. Sell some of 2021, because those are good prices. Have options.
Gary, let me add just one comment on that. I'd still say, from a farm management standpoint, the risks are lean more to the downside than the upside from these price levels.
Yeah, and again, that does bring up this question. If we're looking at option premium and implied volatilities, they're very high right now, or at least higher than they've been the last 3 or 4 years, and we're back to 2012, 2013 levels. And so
Yes.
have options premiums priced themselves of the market yet, or do they remain a tool?
They remain a tool. That's just, they're a reflection, and I believe the evidence shows a rational reflection of the price uncertainty that we face. And, ensuring against that price uncertainty in the option markets is a lot more expensive because the risks are much higher.
Yep, absolutely. Do you expect, Scott, ethanol, what's your Chinese demand for ethanol? Are you optimistic?
That's a good question. I think it's probably going to increase, but I'm not super bullish. How's that sound?
All right. There you go. So this is more of a comment, but local fertilizers prices up for fall purchase. NH3 anhydrous up $150 per ton, K up $75 per ton, P up $200 per ton, and UAN up $80 per ton. And that's not particularly surprising, and I don't think we might have the end of that, particularly if we see prices high. So how do you justify the 450 2020 corn price since so much corn was sold off the combine at 350 or less?
Well, you'll notice the USDA's WASDE price is lower. I think that but you look at the spot prices that we're selling at now throughout the Corn Belt are over $5. So, I do the math and I think that the USD is just, that much too low. I might be a little optimistic, but I think it's probably the actual prices. I think pretty confident it's going to land between 430 and 450. Mine might be a little on the optimistic side, but that's how I did it.
All right. Are you still expecting much higher crop insurance premiums? Yes, we are. And I would also note that that's going to be based on the volatilities or what option premiums are selling for the last 5 days of February. So we're not to that determination period yet that those prices will remain up. All right, what is our capacity to export grain on a weekly basis? Can we meet those export targets?
Yes, we can, because the mix will change. It's clear that soybean shipments are going to slow way down, which will leave room for corn to be in that range. So I don't think there's any capacity problems. I don't know the true ceiling on our ability to ship, but I would guess it's 150 to 200 million, someplace close to 200 million bushels a week of all grains. So I don't see that as being a limitation at this point in time.
All right. We're getting down here to the end. Do you see the need to import soybeans because of tight price stocks ratio at the end of the year?
I see that as a definite possibility. And you'll see that if you look at my balance sheet, that there's it's a small number, but it's pretty large from a historical standpoint. I think I had 35 million bushels coming into the U.S. So I definitely think that will come into the southeastern part of the U.S., given how low the stocks to use ratio looks to be. But to get those things, to make that economically a rational thing to do, you've got to have some pretty high soybean prices in the southeastern part of the U.S. So yes, I think we could see some, but and it marginally makes a difference if it's 35 or 45 million bushels when, if you're at 90 or 95 million total ending stocks, 10 million extra bushels of soybeans can make a real difference. So my answer is yes. And I think there's the potential to see really record imports of soybeans into the U.S. In July and August of this year. And the other part of that's really interesting, Gary, is we could see some crazy high soybean prices if towards July and August if we don't have a really huge crop coming on, and it could be a real opportunity for farmers that get their soybeans planted very early this year to try to grab those old crop price premiums before we start pricing the new crop in the cash market.
So soybean cost versus corn cost. Back around 2000, the difference looked like less than 100. Now they're over 200. What's happened? All of corn costs have went up more than soybeans, but a large part of that is, well, two factors. One of those is seed costs themselves. Seed for corn has gone up more than soybeans, and also the fertilizer thing has played into higher cost for corn. So we'll end with this question, and it's an easy question for Scott. How do you see the future for ethanol usage with the mandates to electric and automakers ramping up production?
Seriously, that's the question you end me on?
Yeah, what the heck?
I
It's an
think
easy one.
it's actually a great question, and in a very long horizon, looking out 10 or 15 years, I think the answer is the future for EVs and ethanol use is not good. It's clearly in the long run going to cap ethanol usage and cause it to go down, just as it is for all petroleum gasoline as well. But the real question is, what's that transit? That transition. You're looking out 10 or 15 years can have hugely different uh, timelines and pathways. How fast EVs can come on, and so I think that probably for the next 5-8 years, I think we'll see pretty small impacts, because you have to remember, for all of the hoopla about electric vehicles, the number of them actually on the road isn't very high. So it's a tiny part of our fleet still. I think probably a bigger issue in the short to intermediate run for corn ethanol is, will there be any possibility of pushing the U.S. to an E15 from a de facto E10 standard through climate change negotiations? I think that's going to be a big issue that I am keeping my eye on. So I'll end it there, Gary.
All right. Todd, take her away.
Well, we'd like to thank both Gary Schnitke and Scott Irwin for their time today, and for you for joining us as well. Jim Balch has been behind the scenes. He does a lot of work that makes sure that all of this goes off as it should, and that those PowerPoints look good when they're up on the screen. Thanks to him. You can find all of our programming, at least the webinars and such, up on the FarmDoc website and their YouTube videos. You can go back and get them anytime you'd like. They're in the archive, so look for the webinars and /IFAS. You'll find the archives under that link. It's easy to do at farmdocdaily.illinois.edu. On behalf of everybody here on the Urbana-Champaign campus of the University of Illinois, I've been your moderator, wishing you a good day. I'm Illinois Extension's Todd Gleason.